A mixed set of results from two of China's biggest metals producers as the global recession drove down aluminum and copper prices. Bloomberg's Stephen Angle joins us from Beijing with the details. Steve.
Well, the nutshell is Jiangxi Copper beat the street, Haslinda, while Aluminum Corporation of China, or Chalco, posted a bigger than expected loss. Here's Jiangxi Copper's first half profit falling 61% because of lower prices of metal. The stock is investors reacting negatively, actually down 3 1/3% in the opening 10 minutes of trade, while Chalco posted its third consecutive quarterly loss after slashing output and cutting costs when aluminum prices last year fell 35%. That stock also down about 2%. Overall, we are seeing a weaker open to the Shanghai Composite Index, down 1.9% at this hour. All right, first the results. Jiangxi Copper, as you see on your screen, net income falling to 1.2 billion yuan, down 61%. That's $176 million US. However, that did beat analyst forecasts. Copper prices almost halved in the period from a year ago because of the global recession. China is the world's biggest producer. It's the biggest consumer of copper. It expanded loans and pushed a stimulus spending plan, the government did, to revive manufacturing demand, and that has helped lift copper futures this year, which have more than doubled, as you see on the right hand of your screen there for copper futures. Shares of Jiangxi Copper have tripled in 2009, at least the 8 shares have in Hong Kong. Analysts seem optimistic about prices for the second half, copper prices, as they expect manufacturers both in the U.S. and Europe to replenish their base metals inventories amid the improving global economy. And even with the stock run-up, nearly half the analysts surveyed by Bloomberg News have a buy rating on the 8 shares of Jiangxi Copper, stock code 358HK. As for Chalco, aluminum prices, they've rebounded 32% this year as the government bought the metal to limit losses for aluminum smelters, and also, of course, those stimulus measures boosting demand for automobiles, also new construction throughout China's biggest cities. But analysts say aluminum prices in the second quarter were still below Chalco's production costs, hence the poor quarterly results. Net loss coming in greater than estimated by Macquarie Group analysts at 1.6 billion yuan, 234 million US, after a profit in the year-ago period. Chalco's Hong Kong and Shanghai traded shares have more than doubled, though, this year on optimism of increased demand. The 8 shares are the third best performer on the Hang Seng Index. It's coming off a pretty low base, though, I might add. The stock fell 75% last year after that big run-up in 2007. The question now remains, are signs of increased demand sustainable? Alcoa, which is Aluminum Corporation of America, back in July said that the government spending in China and the U.S. is boosting demand for aluminum. Chalco raised the prices of alumina, which is a key ingredient of aluminum, for the third time this year as demand recovered. China's industrial output gaining more than 10% in July from a year ago. Car sales are surging. Will it last, though?
The economy overall in China will be steady, and there will be auto sector demand is strong. So that's why I think I'm quite bullish about aluminum prices.
Helen Lau there, bullish about aluminum prices. Worth to note here as well, Haslinda, Chalco, after the earnings results, said that it is, quote, willing to discuss with Rio Tinto a possible deal to cooperate either in bauxite or alumina production. This, of course, comes on the heels of Rio Tinto in June rebuffing Chinalco's planned $19.5 billion investment in Rio Tinto. Chinalco is the parent company of the listed co, Chalco. Back over to you.
Watch that space. Stephen Angle, thank you so much for that.